If you're coming into the real estate and you've got some money, a lump sum, this might be ideal for, especially if you're just looking at to put to work. You don't want to create another job. Like if you've got some retirement and you want your retirement to be, more reliable and make an 8 to 10% or greater return without the up and down of the stock market, you can make reliably 8% or greater returns in performing notes. If you've got a self-directed IRA or a rollover 401k from a previous employer, you want to put it in a self-directed IRA and put something to work where it's getting a good return. This is great for self-directed investors. Buy something, set up the paperwork. You can buy the note. You'll need to provide copies of the collateral, copy of the note into your self-directed IRA company. But that's a great way to start getting above average returns. No matter what the amount is in your IRA, you can find small balance, medium size, even larger balance notes that are performing from funds or other originated paper products, okay? And you can do short-term. Short-term would be more like a hard money loan, or you're lending, private lending to other investors on fix and flips, or you buy a longer-term note that's been around. It's a 30-year note with a balloon, or a 20-year note that you're buying from somebody who's owner financed a house, or buying from a fund or a bank fund. We do see performing notes that were initiated from like a lender or a mortgage banker that you could buy that might be scratch and dent. And by scratch and dent, meaning that the borrower is not paying, or not, sorry, they are paying on time. That's what defines a performing note. But maybe there's a document or two missing, or the lender was going to sell it to another bank, and unfortunately the borrower's credit need to be 680, maybe it was 660, or there may be some other little document things. The note's still good, borrower's still paying, you still have the right to foreclose if they stop paying, but that would be a longer term note than 12 or 24 months. Performing notes can be treated as regular ordinary income, unless you're going to pay taxes on that, unless of course you're using a self-directed Roth IRA, and then that's tax-free. Or if you're using a traditional IRA, it's going to be tax deferred when you pull that money out. Okay. But performing notes, you're just buying the note. You're going to be paying somewhere probably 80, 90, 95 cents of the dollar, depending on what the underlying interest rate is, depending on what kind of rate you do. So I always like to figure out, okay, what kind of return do I want to make on my investment? And that's what I'm willing to pay for that performing note. And look, there's plenty out there, and you can buy performing notes starting at, 25, 30 grand and up from there, up to upwards of millions of dollars. We're actually working with a fund right now who's got 10 million, and they're looking to buy a pool of performing notes at a 10 to 12% greater yield. And they want to mix it with some short-term and long-term stuff, and we're going to be able to help them fill that in the next few months. So something great about that is buying an aspect of performing notes.